How to make $1,000 per week. We don't make it every week, but this week we did. And we're reviewing for, this is September 28th, 2017. And so basically right now the market is at 20, is right here, 25, 25.0, it's actually closing at 25.08 on September 28th. But just recapping some trades from earlier in the week, we did a Nasdaq trade where we had a Fed Wednesday on September 20th. So last Wednesday, there was a Fed announcement, and this is what they said. I usually don't pay too much attention to what they're saying here, but the announcement was at 2 p.m. that day. And normally I try to go into the Fed meeting without a position, but this time I decided to buy puts at the market open at 9:30 and hold it into the Fed announcement. And the reason for that is because this is what the chart looked like, right? So it's September 20th was the Fed Wednesday, and I had already spotted a potential 1, 2, 3, 4, 5 B wave pattern, and I was expecting a C wave down. And to begin that C wave, I saw a wave A drop followed by a B wave rebound that spiked just into the resistance zone. That resistance zone was 6,010, right? So it spiked there and it came back down, and it held overnight, and so that's why. And I knew that day was a Fed meeting, and so I bought puts right at the open. I alerted that to members at. If you look at it carefully, 9:37 a.m. So that's when I bought 15 QQQ. That's the Nasdaq ETF, 145.5 put, which is probably near at the money or something like that. And Fed announcement happened, was able to exit half at 59.40, and the thing is, it popped right back up. So that's the thing. Like, if I didn't sell half, then I would have ended the day pretty much flat, because I would have seen my account go up and then come right back down. So the benefit of selling half, especially when you see it reach kind of support, is you can at least kind of end the day knowing that you made money for that day. It turns out it fell the next day, and just because I wanted to avoid like another big spike up, I exited at 59.40. And so that alone was, I think this part was $500, and this was another $500. So that together was $1,000. And keep in mind that we're risking somewhere around $2,000 per trade. So each trade position size is usually around $2,000 in the option trade. So moving on. So it turns out we did get that AB 1, 2, 3, 4, 5. And the question here was, I had another trade which was in the S&P. So that S&P, instead of September 20th, since that was the Nasdaq that I traded, so September 20th was the Nasdaq, and good thing I shorted the Nasdaq because the S&P didn't go anywhere. Had I bought puts on the S&P, I would have probably lost money. But I bought puts on the Qs, the Nasdaq, because I saw that was the weakest. And so while the S&P wasn't doing anything, we were able to make $1,000 on the Nasdaq. Now for the S&P, it looked like it was starting to kind of move overnight on this North Korea news. The next day on the retrace, I bought puts and held it overnight. But overnight, over the weekend, see these two lines that usually indicates a weekend. So that weekend, it went up. So, and it came back down. So that price action made me seem suspicious. So while I did see the setup for 1, 2, 3, 4, 5 to the downside, I didn't trust it. And so when I saw it reach support, then I alerted an exit on those puts. And it turns out I exited right at the bottom, 24.80, 86, 87. I think the profit here was only just a few $100. And thankfully I did not re-enter the puts and instead looked going up starting from then. And so when it reached 25.05 and it pulled back towards 24.93, right at 24.96, that's when I alerted a buy on the calls. So the calls are not shown here, but this is when I sold at 12:23 p.m. on that Monday, so just around noon. We were able to exit those puts right at the lows. So now that that we bought calls at 24.96, 97, with the market today and kind of closing at kind of all-time highs yet again. Where is it? So the market today, we bought those calls right here, and it went up, pulled back overnight, went back up. So right now we don't know. Right now the momentum's to the upside, so I don't know where it would go. I would ideally target something over 25.10. It's already at 25.08, so I would just see what happens tomorrow. So right now we're just holding our calls and see. I think they're up around $400 or $500, something like that. All right, so those are 3 trades that we did, 2 round trip and 1 that's still in process. The one that's in process is the one we just bought calls at 24.97. Before that we did a round trip on the SPY puts, which is here. Bought the puts here, sold the puts there, but that was just maybe $300. We made more on the Q puts, which was purchased before the Fed meeting. And of course, I wish I alerted the Q puts. I continued with the Q puts instead of the SPY puts, because the Q puts would have given us a lot more. But it is what it is. So those are the 3 trades, and that's how we make $1,000 per week. It's not every week that we do, but we try to do that more than we lose. Oh, and for losses, I do have to mention that we did have to exit volatility positions, VXX and UVXY, at a loss. It's kind of ridiculous how September and October are historically the very volatile months, yet the volatility index, let me try to pull it up, it's been at an all-time low. I mean this kind of drop that you see in September is very, very uncommon, and so it's kind of frustrating that volatility didn't go up, but it's best to exit and re-enter it at another time. So that's it for now. We're still on the positive, and hopefully the trade we're holding on can turn some more green.